Merry Christmas, everyone! It is officially December 24th. The markets are closing early today, and technically, the famous Santa Claus Rally window opens right now. History tells us that for the next 7 trading days, stocks represent a sure thing, a gift from the market gods. But I'm looking at the data this morning, and I have to be the Grinch today. I think this year's Santa Rally is a trap. A liquidity trap designed to get retail investors, people like you and me, to buy at the top, just so institutions can dump on us in January. In this video, I'm going to show you why low volume is lying to you today, and my 3-step game plan to protect your portfolio before 2026 begins. Let's dive in. First, let's get the definition right. A lot of people think the Santa Claus Rally is the whole month of December. It's not. According to the Stock Traders Almanac, it is specifically the last 5 trading days of the year and the first 2 trading days of the new year. That clock starts today, December 24th. Since 1969, the S&P 500 has gained an average of 1.2% during this 7-day period. It sounds great, right? It sounds like free money. But here is the catch. When Santa doesn't show up, when stocks stay flat or drop during these 7 days, it usually predicts a bear market or a massive correction for the coming year. Yale Hirsch famously said, "If Santa Claus should fail to call, bears may come to Broad and Wall." So why am I worried? Look at the volume today. Wall Street desks are empty. The big hedge funds, the pension funds, the algorithm managers, they are all in the Hamptons or Aspen right now. Who is trading today? It's mostly retail bots and smaller retail traders. This creates what I call the low liquidity trap. When volume is this thin, it takes very little money to push the S&P 500 or NASDAQ up. A few $1 million can paint a green candle. But this price action isn't real. It's not supported by institutional conviction. We are seeing stocks like SPY floating up simply because no one is selling yet. But asking yourself, are you buying today because the fundamentals changed overnight? Or are you buying because you have FOMO while staring at your phone on Christmas Eve? Here is the scenario no one is talking about. We move into January 2026. The tax year resets. Everyone who held on to winners to defer taxes, they are now free to sell. We have had an incredible run in 2025. There are a lot of unrealized gains sitting in portfolios. The moment the big boys come back to the office in January, their first move might not be buying. It might be rebalancing. If they start selling to lock in profits, and we, the retail investors, bought the top during this low-volume Santa rally, we are going to be holding the bag. We become the exit liquidity. So am I telling you to sell everything? No. But here is my game plan for this week. 1. Don't chase green candles. If you see a random 3 to 5% pop this Friday, do not chase it. Treat it as noise. 2. Watch the support levels. I am watching the S&P 500 level at 68.40. If we break below that during this 7-day window, I am going to cash. 3. Wait for confirmation. Real traders wait. I am keeping my cash ready until the 2nd week of January. I want to see what the institutions do when they get back to work. Enjoy your Christmas. Spend time with your family, not your brokerage app. The market will still be there in 2026, and it's better to be late and right than early and wrong. What do you think? Is Santa bringing us gains or pain this year? Drop a comment below with your prediction. Merry Christmas, guys. I'll see you in the next one.